Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. As many of you know, I also like buying Tesla LEAPS. Check out some of my earlier LEAPS videos if you don't know what they are or my investing strategies for them. But for those of you already in the know, who are also investing in LEAPS, then I thought I would just give an update on where I am now, as we've seen a sizable movement in the stock price as of recent. My LEAPS I bought earlier this year, some are now well over 100% return. So before, when I was showing all of you how and why I was buying them, when the stock price was in the 5 to 600s, well, now you can actually see the end result and the power of leverage. Except this is just the start of it. My LEAPS are now in the money. The stock price only has to increase about 20% for me to gain another 100% return. This is when it starts to get much more fun. If the stock price goes up another 50%, then I might have something like 4 to 5 times return on some of my LEAPS. For those of you who would buy on margin, you would have had to have some serious leverage to receive those returns, which would have been highly risky. I'm not sure how many trading accounts even let you buy on margin that high. I don't buy on margin, it's never been my strategy, as it's a way you can lose everything and be wiped out of Tesla. I have a rule, never risk being out of Tesla. So I double my money in the space of a few months. What now? Do I sell and wait for a dip and then rebuy cheaper, taking profits? Well, as a lot of you know, I bought these LEAPS to hedge today's price in a couple of years when I can afford to exercise the LEAPS and buy the shares. My strategy was not to trade. I don't offer any trading advice. The statistics clearly point to your chances of getting the best return are from investing long term, not trading. Human psychology may fight against you, but resist the urge to sell and take profits if you want the best chances of getting the highest return. This is not financial advice, this is me just stating statistical facts. Again, the saying, time in the market beats timing the market, will always ring true. Compounded returns. Oh, except it's Tesla, so exponential compounding returns. Don't risk missing out on that. I've seen it happen plenty of times. Anyway, what now? So I'll explain some strategies of what you can do now if you're holding LEAPS and what you can do to buy more LEAPS or get into LEAPS for the first time. And I'll tell you what I plan on doing. But please leave your comments and tell me your LEAPS strategy too. LEAPS are not covered much. This might even be the largest Tesla LEAPS community in the entire world. So please share your stories and strategies so we can learn too. Now, for most people, when you sell your LEAPS, you are subject to tax. I said sell, not exercise. But not everyone is, depending on what tax you're subjected to or what type of retirement account you might have. Now, if you still have a year or so or even more left on your LEAPS and you plan on exercising your LEAPS when the expiration date comes and you're not subjected to tax, and if you have sufficient capital available to exercise them, then one strategy that may be better for you rather than exercising them will be to sell your LEAPS and buy shares. You see, there is still a premium on your LEAPS due to the expiry date being so far out. There is value in that. As you get closer to your expiration date, this value will continue to diminish. For example, if you have $700 strike price for your LEAPS, and I'm just using basic numbers in this example, not actual market numbers, to keep it simple. Well, right now, your LEAPS are about $200 in the money, yet you could possibly sell them for $300. If you were to exercise these LEAPS right now, it would cost you $70,000. And if you bought the equivalent in shares, it would cost you $90,000. Let's just say the stock price is $900. Well, if you sold your LEAPS, you would get $30,000. As we said, they had a market value of $300, and every LEAPS contract comes with 100 shares, despite only an intrinsic value of $200. So you have $30,000, and then you only need an extra $60,000 to buy 100 shares, i.e. this means you pay $100 less per share. Even if you do have some tax to pay on LEAPS, purchasing shares might still be cheaper for you than exercising. However, in that scenario, you run into the opportunity cost, which is why I clearly said if you have sufficient capital to purchase the shares anyway in the above example. Yes, opportunity cost. If you're buying shares or exercising now, then that means you have less capital to invest in more LEAPS. Rather than purchase 100 shares, you could always buy 3 or 4 more LEAPS contracts and control 3 or 4 times as many shares. Anyway, I'm back in the market for more LEAPS. Despite this latest stock price increase, we have new information that has come to light. It's mainly 2 things that have made me more bullish right now. This insane ramp up happening in China. I'm surprised investors are not making a bigger deal over it. The Chinese October numbers are going to be very telling. If they're as good as I'm hoping, then I'm going to have to find some more strategies of accumulating more LEAPS. And I bet when they are announced, even if they are as good as I hope, that the stock price will barely move. The market won't understand what it really means. The other main factor is these automotive margins. It won't take long until we're up to 40%. Whether it takes a year or 3, it doesn't matter. There is a clear path to achieve that. Tesla has no demand issue whatsoever. The prices are still increasing across all models, and there is no competition coming to squeeze margins. And then the fact that ramping up will start to see more economies of scale finally kick in means operating margins will reach unbelievable levels. And bear in mind, as high as these margins are that we have now, they're still including stock-based compensation and depreciation. Yeah, I know the price has risen 20% or so lately or more, but so has my confidence, conviction, and faith in the potential of this company. In fact, I'm thinking Tesla can be a lot more of a company now than I thought just a few months ago. And this might be a theme with Tesla, continually blowing my mind. Just wait until we see what comes off the production lines of these new factories and how fast and low cost too. We haven't even got 4680 batteries in the cars yet, let alone Tesla's LFP batteries. Wake up, we're still at the start of the S-curve. Every cent I make ends up in Tesla and Bitcoin. It's frustrating not having enough money to invest when you know it's going to go up tenfold in the near future. Well, that's the reason I have no money, as I keep putting it all in. But I think I need to start selling shares again to buy LEAPS. I usually wait for a dip to buy LEAPS, but what if this is a dip? How can the stock price increase in a dip? Because dips are relative to the value of the company that the market has assigned. This might actually be a dip. In other words, I'm still going to buy at the all-time high. I'm sure these prices will look cheap in 2 years' time anyway. However, I think this time I might dollar cost average. I think I'll buy 1 or 2 contracts and leave some funds available for 1 or 2 more if the stock price dips back into the 800s. 800 is the new 600, I think. But how am I going to find the money to exercise all these leaps? Well, I have about a year or 2 to scrape enough funds together to exercise these leaps. I'm not sure this YouTube channel will be successful enough to cover that cost. However, my house has gained a lot of equity as of recent too. If I can earn enough from this channel to increase my income enough to apply for a larger mortgage, then I can cover the cost of exercising them. Now, hold on, that is sounding highly risky, right? Well, just think for a second. Why would I exercise them in the first place? Because the stock price is probably $2,000 and I can buy the stock still at $700 or $800. I'll borrow perhaps an average of $75,000 for each contract, but have an asset worth $200,000. Not to mention the rest of my Tesla portfolio is doing pretty well by that stage. In fact, my entire house at this stage would be looking like a relatively small asset against my shares. So I'm comfortable doing this. I also have income aside from this channel to help me. But this is my financial position. Yours is different. I just like to talk about what I'm doing and share with you. I never suggest you do it. I mean, you never know. I might have a wealthy father who would still look after me, even if I lost everything to fall back on. Well, we all have different situations and levels of risk we're comfortable with. And like I said, I'm not comfortable with the risk of buying on margins. But this is Tesla, and we haven't had much FUD lately. Surely there might be some on the way. Yes, most likely, and I think if anything major hits the fan, then I'm quite possibly going to change my Tesla portfolio and have a higher percentage of my portfolio in LEAPS rather than shares. This company is going to be big, the biggest ever. On top of that, there are plenty of macroeconomic factors that could come into play. China is starting to show signs of cracks with their despotic growth. Yes, despotic growth. It starts out good until it doesn't, just like we saw with Soviet Russia. But who knows? I guess we'll have to see. It's crazy how the economies of sub-nations survive, just like Japan. But these macro factors are affecting the implied volatility. Implied volatility is the other element that affects the price of options and LEAPS. If there is less confidence in the market outlook, and we see events like Evergrande unfold, then the implied volatility will get worse, which means the price of options will come down. Anyway, exciting times as always with this company. I just want to own as much of it as I can, like most of you. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.